Welcome back. We have been speaking with the Citizens Monetary Policy Committee members who habitually meet before the Reserve Bank's MPC meets, and we are asking them their diagnosis of the economy and their prescription for getting growth back on the rails. I mean, we all know growth is the problem. The just received GDP numbers being as bad as 5.8%, a 20-year low. Okay, I have with me Chairman Pronab Sen and members Samiran, Chakraborty, Soumya, Kanti, Ghosh, Sajjid, Chinoy, and Sonal, Varma. Sonal, once again, let me start with you. Set the ball rolling. What do you think the MPC ought to do?
I think, Latha, we need to sort of go back to the drawing board to ask the question, what should be the MPC's priorities right now? And I think the number one priority at this stage is really financial stability. The system actually is quite fragile. We've seen 8 months of the NBFC stress actually continuing, and therefore the interlinkage between NBFCs, mutual funds and banks, I think the problem has persisted for quite some time. Second, the growth problem, of course, is there, as we discussed. And third, like you said, it is all about transmission. At the end of the day, the rate cuts have not transmitted, and that's partly been because liquidity has been tight. I think that has changed now, but the commitment to keeping liquidity supportive needs to also come through. So I think if we keep all these three things together, the common factor here is that the liquidity conditions need to be positive. The skew on liquidity needs to be positive. So I think that's the number one commitment that the Reserve Bank should be giving. And second, consistent with inflation being within the target, growth being below target, and financial stability actually being the number one priority right now, I think it definitely calls for front-loading and preempting whatever rate cuts need to be delivered.
Sajjid, actually, would you agree that a rate cut is not enough? There needs to be some signal on liquidity, and the MPC may even proactively make it clear that even with fiscal slippage, which looks maybe likely this time, the MPC should keep its accent on growth. Do you think that should be the message conveyed?
Well, that's a couple of things. One is, I think we should not overload with the inflation targeting framework with so many more objectives than instruments. I agree that financial stability is a concern, but there are regulatory measures that one can use. I agree that the NBFC sector is frozen, but we've been arguing that some kind of asset quality review, an AQR, will be necessary there to break the asymmetric information loop. I think the framework, so that it doesn't confuse markets, should go back to where is inflation, and if inflation is under 4%, where is growth? And you know, now on your transmission issue, I think at the margin liquidity will help, but I think there are some steps that the government can take to enable higher monetary transmission. You know, for example, those small savings rates being at the level they are, make it harder for deposit growth to pick up, and when incremental credit deposit ratios get to the levels they are, it's going to be hard for banks to transmit rates. The curve, for the most part, except the last 3 weeks, has been very steep, I would argue, because the public sector borrowing requirement is close to 9% of GDP. So my point is, while liquidity will help, there are some fiscal things the government can do, things on small saving schemes, which will help enable monetary transmission.
You know, actually, Sajjid is making a point that if the fisc, which will, you know, strain the economy, because now the Pradhan Mantri Kisan Yojana is not just for farmers with 5 acres, but for all farmers. So there is going to be a strain. Samiran, a slightly more technical question to you. There is no way deposit rates will come down when, as Soumya said, this is the, you know, the gap between deposit growth and credit growth is so high. Banks simply are hankering for deposits. And even on the liquidity issue, I have a more technical problem. The way in which the Reserve Bank keeps the rate at the call rate, keeps the repo rate at the call rate, if it is committed to doing that, then how will they introduce more liquidity? How will they communicate that they are for a softer side?
So one part of your question is about absolutely structural issue, which is the saving investment balance. I don't think we have any short-termish solution to a structural problem of increasing saving or even reducing public sector borrowing requirements overnight.
So even if the small savings rate is brought down, the deposit rate is not going up so quickly.
This is the first part of the problem, which is the very structural nature of the problem. Then comes what are the things that can change. So within the household financial savings, you can incentivize a little bit more coming towards bank deposit vis-a-vis small savings. So to that extent, the banking system liquidity might improve a bit. But again, this is not going to be an instantaneous process. The instantaneous solution that the markets would want is the liquidity provision by RBI, which in a sense is just kicking the can down the road because the structural solutions have not been taken. But still, as you might have already noticed, that the liquidity has become much more comfortable now.
Yes.
So if there is some kind of a guidance from RBI that liquidity will be kept comfortable in a quantity definition sense in the current level, I think that will provide enormous comfort to the markets. The markets don't really want liquidity to be surplus and repo rate to fall to the weighted average call rate to fall from repo rate to reverse repo rate. That does not happen in the current monetary policy operating framework. We have to accept that. But within that framework, if liquidity is kept in a quantity sense more neutral, I think that itself will be quite a bit of a positive from markets.
So a lot of communication is what you're prescribing.
A lot of communication is required that this is the plan. The plan is not to keep structurally the liquidity to be in deficit and keep weighted average call rate at the upper end of the curve.
Okay. And to you, Soumya, now, is this enough? Because the dislocation is at a housing finance company space where people or banks are not even willing to lend or bankroll. So is just an accommodative policy or a comforting stance enough, or do you think something extra needs to be done as lender of the last resort? Buying stressed assets, something that was done in 2009.
No, I think. But before that, just a point to what Sajjid said in terms of the small savings. I think it's always a very good suggestion to bring down the small savings, but I'm not sure whether the government can able to bring down that, because in the last couple of years, the government has been financing the fiscal deficit from small savings because it wants to reduce its reliance on market borrowings so that the yields are not impacted. So from that point of view, I don't know whether that is possible. Regarding the issue of your whether some sort of an window could be opened to 2009, I think the current problem with the NBFC is mostly of a solvency issue, because what is happening is that the better rated NBFCs are getting the funds and the NBFCs which are not better rated, they are somehow being distinguished. I think this is a natural course of the problem. Over a point of time, this problem will get sorted out in terms of who is a better NBFC and who is not a better NBFC, who is not a so much better NBFC. Regarding Samiran's point in terms of the quantity, I think that's a good idea, but my sense is that two things needs to be done. The RBI needs to be very clear that it is injecting durable liquidity and not replacing durable liquidity with frictional liquidity or transient liquidity like government cash balances. And the second thing, I would like to put the ball on the court of the RBI is that whether the RBI can give instructions to the bank in terms of some benchmarking, external benchmarking. I think that has been out in the public domain for a while. The banks need to see whether they could actually find out some mechanism where the assets and the liabilities side move together, because until and unless we don't walk down that road, it will be very difficult on part of everyone to transmit the way what the central bank wants. So some sort of an asset liability movement.
20 years as a banking reporter with bankers at RBI trying to figure this out, BPLR and then PLR and then MCLR, base rate. And now, okay, they are trying to get external benchmarks. It's just,
but the asset and liability side need to move together.
Okay, should move together. I think it does, but maybe with a lag. Dr. Sen, no time limit for you. If you can put all these prescriptions together, do you think a separate window is needed to give comfort to the NBFCs? As well, what should the MPC ponder about liquidity, CRR cut, all instruments? What would you do, sir?
Well, I think the points that have been made sort of cover the bases fairly comprehensively. I think there are only two issues that one really needs to look at. The first issue is what the NBFC problem and the financial stability issue that Sonal was talking about. And then we have the alternate point of view that came later, which said, let the system fix itself for a while. And I think my personal view is that we really need to get this NBFC thing sorted out, and perhaps let it be sorted out in an organic way rather than through direct policy intervention. Because what we've had is that over the last 10, 15 years or so, the relationship between the NBFC and the banking sector has changed in a manner which I frankly think is undesirable. And now I think this needs to get sorted out. A lot of the weaker NBFCs need to go. There has to be consolidation of the NBFC sector so that, something similar to what's happening in banking, which is stronger banks actually starting to take over weaker banks. This sort of thing will have to happen in the NBFC, and I think that's very desirable.
Okay.
The second issue has to do with liquidity. And this is really at the heart of the whole problem. Liquidity is not just for increasing the lending or having the transmission happening. We also have to keep a weather eye on what's happening to the exchange rates.
Yes.
And the exchange rates, again, do not fill you with joy. As it is, the world economy is weak. And if the Indian rupee continues to actually gain, if anything, in real terms it's certainly gaining, that's not good for anybody. And so I would imagine that the focus now really should be on liquidity and less so on the interest rate. I don't think the interest rate matters that much. And finally, on this question of external benchmarking, as a person who believes in markets, my gut reaction is that if you're going to fix the bank interest rate, whether you call it external benchmarking or call it fiat, it comes to the same thing. And I hesitate to get rid of an instrument which is telling me something about the market which I need to internalize and react to. So loss of information does not help anybody. And external benchmarking will lead to a loss of information.
Well, it also is a problem that not all our external benchmarks are very liquid. So that would be something that the External Benchmarks Committee will worry about. We have covered comprehensive ground. Chairman Sen has put it all together. On the exchange rate, we must remember that we are in very tense times, and it looks like China might retaliate rather severely, and the yuan rate to the dollar is coming close to 7. The heavens may not fall if it breaches 7, but it looks like at least we have the elbow room, therefore, to allow the currency to depreciate. Indeed, it must not appreciate, as Dr. Sen puts it. Well, gentlemen and lady, I think it's time we start voting. Let me once again start with the lady. Sonal, first question to you all is, what is the action you expect, cut or hike, and by how much? Sonal.
Latha, we are expecting a 25 basis point rate cut.
Okay, thanks for that. Sajjid, your take?
Latha, we think the MPC will also cut rates because I think they'd worry about output gaps opening up.
Okay, I wish you all would raise your boards adequately. Samiran, your expectation? 25 basis cut. Soumya?
We were expecting a 25 or could be larger than 25 rate cut, this policy.
Larger than is, I hope it's not 35.
That's debatable, but
okay.
It could be larger than 25.
25, so it could be 50 as well. Dr. Sen, what would your prescription be? Okay, 25. I thought Dr. Sen would do even more, but the chairman doesn't have to do any casting vote. He agrees with his members. The next question to you is, what should the stance be? Since many of you have spoken about communicating effectively, I think the stance becomes important. Sonal, what should the stance be? They are at the moment in neutral, right?
It's a bit too late, Latha. So we think at this stage, stance will likely stay at neutral.
Okay. Fine. Yes, I guess it would have been beneficial if ahead of the 3 rate cuts we had accommodative. But nevertheless, we have to do what we can. Sajjid, what should the stance be?
Exactly the same, Latha. I think they realized after 2 rate hikes to change the stance. In your 3rd rate cut, I think it's not prudent to change the stance.
Okay, so neutral again. Samiran, what your sense?
Similar kind of
Again.
argument. So I think they missed the boat in the last policy.
Okay. I'm in the boat of accommodative. Anyways.
Yeah, it's basically should be neutral,
Neutral-ish.
a little bit turning towards accommodative, but I think I agree with the rest of the members that it is too late to change the stance now.
Okay. Say neutral, but try to sound more
Trying to be
accommodative in other parts of the
Yes.
statement. Dr. Sen?
I'm with you.
Oh, thank you. Thank you, Dr. Sen. Go accommodative, my sense is there may be more rate cuts. Well, actually, very quickly, Samiran, you think that, how many rate cuts do you think there will be, including the June 6th?
So I think the August rate cut possibilities are now open.
Okay.
So
One more.
August.
Soumya?
Maybe one more, but it depends on how much you cut this time.
Okay. Actually, I don't have time, but Dr. Sen, I'll squeeze one with you. How many rate cuts do you think before the year is out?
I think August they'll pause
Okay.
because they need to have a little bit of time for things to play out.
Okay. All right. Well, anyway, Dr. Sen has very clearly said that the stance should be accommodative and that should be communicated. Thank you very much, members of the Citizens Monetary Policy Committee, for your deliberations. With that, it's a wrap on this meeting.